Hey everyone, my name is Ben Lemper and I'm a junior in the AIM program covering the financial sector. Today I will be presenting Customers Bancorp Incorporated, ticker CUBI. Customers Bancorp is a regional bank with 12 branches in the Mid-Atlantic and New England regions, but offers services through their partnership with Bank Mobile Technologies Incorporated nationwide. They have a total of $13.9 billion in assets, excluding PPP loans, and both deposits and total loans and leases stand at about $11.3 billion. Earlier this year, CUBI divested BMT to lower expenses, but maintains access to their technology through a 10-year contract. Through BMT's focus to be undergraduates' bank for life, CUBI serves about 1 million college students, retaining 98% of their customers year to year. In fiscal year 2020, BMT reported $67 million in revenue, a 9% year-over-year growth, and their financials have been included in CUBI's financial statements since 2018. CUBI itself has weathered the recession exceptionally well. In fiscal year 2020, demand deposits totaled $11.3 billion, an increase of 31% from fiscal year 19. Increased deposits allowed CUBI to create more loans, contributing to a 17% increase in net interest income in fiscal year 20. Additionally, their net interest margin increased as cost of deposits decreased 107 basis points to 0.58%. Through their high-tech, high-touch approach, they expect to continue to grow their deposits organically and expand their loan portfolio. In fiscal year 2020, loans and leases, excluding PPP loans, grew $1.2 billion, an increase of 12.1% year over year, by targeting small to mid-sized businesses across industries. This growth comes with little risk of delinquency through conservative underwriting and prime borrower requirements. At the end of fiscal year 2020, the top three components of their loan portfolio consisted of mortgage warehouses at 32%, commercial and industrial CREs at 20%, and investment CREs at 10%. This year, CUBI plans to slowly decrease their volume of mortgage warehouse loans, focusing on industrial and commercial loans like regional hospitality businesses and healthcare loans throughout the nation. With economic activity in the region predicted to grow nearly 5% this year, and both manufacturing and non-manufacturing businesses coming back strongly, CUBI will have many opportunities to create more loans. As one of the top lenders of PPP loans in the nation with $5 billion in loans to over 100,000 customers, CUBI also expects significant income increases from the forgiveness of PPP loans. Due to the strengthening economy, opportunities for significant income from PPP loans, and their partnership with BMT, it is recommended that CUBI be added to the AIM Small Cap Fund with a price target of $47.20. Representing an upside of 46.89%. With the COVID-19 pandemic starting to subside, the economy across the United States is slowly starting to reopen. As states lift restrictions, local economies are starting to heat up quickly. The passing of the $1.9 trillion stimulus package has also contributed to the fast-growing economy. In March, Federal Reserve Chair Jerome Powell announced that they will let inflation run above the 2% target rate until 2023. High inflation leads to a higher yield for the 10-year Treasury bond, the basis for all mortgage rates. Since the beginning of 2020 alone, the yield has increased from 0.92% to 1.72%. For a regional bank, the company holds an impressive 2% of all U.S. mortgage market share. With $3.7 billion in mortgages to customers in 2020, which is up 59% year over year, CUBI could see a significant increase in their pre-tax interest income received from mortgages in the next few years, raising their net interest margin to just under 3% by fiscal year 2023. The convenience of technology in the financial industry is in high demand. To address the diminishing relevance of regional banks, CUBI helped create Bank Mobile Technologies Incorporated. In January of this year, CUBI closed the divestiture of BMT. In their agreement, BMT grants CUBI a royalty-free license to their mobile banking technology for 10 years, and CUBI will retain all revenue it generates from their deposit accounts. BMT will be held responsible for all costs, fees, and expenses incurred in connection to CUBI's customers. This strategy allows CUBI to compete with fintechs. In fiscal year 20 alone, CUBI generated $1.3 billion in deposits digitally through the online platform, up $424 million year over year. While the digital aspect is important to them, they are still focused on the personalized touch that comes from banking with a regional bank. Their concierge banking approach provides specific relationship managers or private bankers for all customers that are available through appointments for 12 hours a day, 7 hours a week. By the end of 2021, CUBI is on track to gain several 100,000 customers opening new accounts on their online platform. When the Paycheck Protection program was announced in March 2020, CUBI saw the potential in becoming a top lender. Through the use of BMT, CUBI became one of the top 10 PPP tech-focused lenders in the United States, holding about 2% of all PPP loans. They have submitted 15% of their loan balance for forgiveness and have received 99% forgiveness in fiscal year 2020. In early January, when they opened a portal for PPP forgiveness applications on their website, they saw over 50,000 applications with the average loan size under $50,000 and trending lower. In the first half of 2021, they are expected to earn about $100 million in pre-tax origination fees from PPP loan forgiveness from round 1 and 2. With the remainders of rounds 1 and 2 and the entirety of round 3, CUBI can expect more than $150 million in revenues from pre-tax origination fees in the late 2020 and early 2022 fiscal year. To reach an intrinsic value for CUBI, a 5-year excess equity model was created. Using a terminal growth rate of 1.5% and a cost of equity of 11%, an intrinsic value of $47.07 was reached. Additionally, a PE multiple valuation was calculated using a weighted average peer multiple of 20.85, resulting in a relative valuation of $78.45. Finally, a PB multiple valuation was calculated using a weighted average peer multiple of 1.18, resulting in a relative value of $37.04. By weighing these models 60, 10, 30, a price target of $47.20 was reached, representing a 46.89% upside. CUBI does not currently pay a dividend. One risk to CUBI's business is large national banks. CUBI faces the risk of losing customers to these banks because they can offer more resources to customers. Another risk is a slow economic comeback. If the actual economic recovery of the United States economy is slower than projected, it could have adverse effects on the company. Finally, when their contract with BMT expires in 10 years, they could lose access to their online banking system if either party chooses not to renew the contract. Jay S. Sidhu is the chairman and CEO of Customers Bancorp. He has been with the company since 2009. In recent years, he has received many awards, including Ernst & Young FinTech Entrepreneur of the Year and Turnaround Entrepreneur of the Year. Richard A. Est has been the Chief Operating Officer of Customers Bancorp since 2009. In his career, he has served as an independent consultant for over 70 financial institutions. Carla A. Leibold has been the CEO and Senior Vice President since 2013 when she joined the company. Due to the strengthening economy, opportunities for significant income from PPP loans, a diversified loan portfolio, and their partnership with BMT, it is recommended that CUBI be added to the AIM Small Cap Fund. I'd like to thank you all for taking the time to listen to my recommendation. If you have any questions, please feel free to reach out to me.